You're watching Daily Edition of Your Trades on ET Now. This is Priyanka Uppal along with me, Snehi. Markets continue to be in pressure today. Ever since they opened at the highest point and this started to slip at the start only and continue to drag down throughout the day today. And of course, this was after the record closing high we saw in the previous sessions. A couple of spaces which were standout gainers today. IT Pack was a clear standout gainer for the continuous second day today, and this is all amid the global rally which we're seeing in the growth stocks. Nasdaq was a big gainer yesterday, and clearly on the back of the mega cap stocks there. Large cap names like Wipro, Infosys, they were up with more than 1.5% of gains, and not just the large caps. In fact, the mid-cap IT names like Coforge, Infosys, they also advanced for more than 2% today. Another space, energy, power utility, they were also in action today, especially the PSU space, talking about Oil India, ONGC, Coal India, RIL, Power Grid. They were the standout gainers gaining pass, and Power Secchi did make a comment on which the entire pack was buzzing that the India's peak demand, which is expected to cross 400 gigawatt mark by 2031 to 2032. Power ancillary stocks were also in action today from the broader market stocks like transformer rectifiers, Universal Cable, Kalpataru. They were the clear standout gainers today. Couple of smaller spaces like subsectors like paper stocks, they were in focus. Stocks like JK Paper, Andhra Paper, West Coast Paper, because of a price hike which companies are expected to take. Paperboard prices have increased in a range of 2,500 to 5,000 metric ton, and that's how this entire space was buzzing. A couple of other news on which the stocks were reacting, and especially the broking stocks, they were falling today because of a market regulator notification, the remark on them that the action SEBI is taking, that they've asked all the market infra institution MIIs to charge all the members uniformly and not on the slab rate. This was clearly impacting the entire space. So a lot of action today, and in fact a lot of brokerage notes also on which stocks were reacting.
Absolutely, and let's speak about one such brokerage note today coming in from DAM Capital for Anantraj. A very bullish note coming in. On that front, they've initiated a buy rating with a target price of 620. That stock has closed at 481 today, and 620 is still quite the massive run up that DAM Capital is expecting on Anantraj. Very seller moves coming in. Anantraj was as high as 10% today, and look at where that stock has closed today, 8.5% higher. Moving on, I just want to mark some more buzzers before we move on to the technical outlook, and I want to mark DCX Systems, because what a stellar move coming in on that front is on the back of an order win. You have Pokarna, IOL Chemicals, now that they have been allowed to supply to China. Godrej Properties on the back of 3 back-to-back positive announcements. L&T on the back of that 30,000 crore order win coming in from Aramco. You also have Kotak Mahindra Bank that recovered in trade after they clarified that they have no idea, or they were not aware of any investor being Hindenburg on their board. So lots of stocks in focus today. Like Priyanka mentioned, we had the IT pack and we had paper stocks. All of them did pretty well, but let's move on with the show and get a sense on the technical outlook and what to expect on the levels going ahead. And for that, we have our in-house expert Kunal Bothra joining us on the show today. Kunal, tell us what we can expect from the markets going forward, because good moves coming yesterday. Markets today in the morning also opened at a pretty good level, but they have receded after that. Do you think this is a one-off consolidation that we're seeing today, or do you think this will continue tomorrow?
No, I think it's been a natural habit of the market to make a new high intraday basis and then go into a corrective phase.
Yeah.
We've seen the good part about the correction today was both the indices, when they corrected, the correction halted at their strong psychological mark, which is 24,000 on the Nifty approximately and 52,000 on the Bank Nifty. So both these levels were held on to on closing basis, and I think that's the positive side for the indices as such. The market breadth was a bit more stagnant today this time around, because earlier, for example, a day like yesterday, where we saw the mid caps and small caps rallying up high, we saw the overall market breadth a bit more placid this time around. So my expectation is that we could probably get into a phase of consolidation. There could be a possibility that, say, in the next couple of days, we may try to dip down below the 24,000 mark for the index, but it may not be a major gash or a major reversal for the indices. So we should be ready for some patch of consolidation. 24,000 acting as a pivot support for now for the index.
Okay, that's On the Nifty, but then Kunal, do tell us about the bank Nifty also. We saw because of a particular news and especially the Kotak Bank, the entire banking space was had taken a hit today. Though there was some recovery once Kotak Bank had given a clarification, but how would this space pan out? Is there a kind of a consolidation looking ahead, or there can be a deeper cut for banks?
No, the concern for banks is, Priyanka, that since last many days it was only private sector banks which were moving up higher. So you had HDFC Bank which was looking strongest amongst the pack. Then you had recoveries from even ICICI Bank to a larger extent. But then recoveries which was coming across for IndusInd Bank and Kotak Bank. Now after today's sharp correction, it indicates that now we could be again into a staggered move from the private sector banking names, which means HDFC Bank and ICICI Bank could remain the stronger ones. But then the other two, the likes of IndusInd Bank, Kotak Bank could remain weak. Even the PSU banking lot could remain a bit more weaker this time around. So the concern for the banking index could probably aggravate, because earlier there was one part of the banking stocks which was looking positive. Now that's also broken into two. So that means that we could probably be at a point where the bank Nifty may drag. So I think a best strategy over here is to try and wait out for a decent correction on the bank Nifty to try and go for a bottom fishing. So maybe closer to 51,500 could be a good mark for the bank Nifty.
Bottom fishing is the call coming in for Nifty Bank. But Kunal, quickly also take us through your stock picks and how to navigate tomorrow. Where are you seeing value?
So I'll go with one buy on large cap name and one on the mid cap front. L&T is the first stock which I would suggest as a buy, coming back into a breakout mode. Targets of 37.50, stop loss could be kept at 35.50 for L&T. And Usha Martin is the other stock which I've been bullish on. Stock closed above the 400 levels. So would suggest a buy with a target of 440 and stop loss at 380.
All right, L&T and Usha Martin, two picks coming in from Kunal. Kunal, thank you so much. We'll let you go on this note. But then Kunal is talking about maybe a temporary hit on banks. But how do financial and banking space looks like to Gautam Shah, founder and chief strategist of Goldilocks Premium, who's bullish on banks and says that HDFC Bank is set to touch 2250 level. He also likes Canara Bank, SBI in PSU Bank, and also sees SBI as one of the top performing stock in the entire pack. Let's listen in.
I think the stock has taken leadership and will continue to do well. And once the level of 1750 is taken out, I think the stock is headed for 2000 and possibly 2250. So that's our medium-term view on this particular stock. And if this stock does well, it will help the bank Nifty, and obviously it will help the Nifty as well. But coming to the bank Nifty, I think 6 months of underperformance. I think there's a lot of catch up to do. We like the top three banks, HDFC, ICICI, and SBI. And I think all these three top banks can propel the bank Nifty towards a level of 60,000 over the medium term. I think SBI has been the trade for us this last 6 months and could be one of the best performing stocks in the Nifty. I think SBI is good for 1,000 and possibly even 1,200. So I'm talking of a 30 to 40% move on SBI even at these prices. So I think it's a very mature kind of an uptrend that you're seeing in SBI. So if at all you want to be in PSU banks, stick to SBI and Canara Bank.
SBI and Canara Bank are the top PSU bets coming over there. So let's move on then and talk about some impact that we saw on the broking stocks today, especially Angel One that was lower by 8.5%. Now, broking stocks were taking a hit on the back of that SEBI circular barring volume-led discounts to brokers, asking market infrastructure institutions or MIIs to levy uniform charges. My colleague Sharad is joining us with more details and to make more sense of this circular that we've seen coming in from SEBI. Sharad.
Well, yes, of course, we know that the SEBI circular has come on this market infra institutions for charging the members uniformly and not on slab rates. And of course, there is a cause of concern, especially coming in when it comes to the discount brokers, as this impact might also impact the revenue sharing practices which are there with the brokers as well. Now, the directly impact might be coming in the zero brokerage model or the discount broking model. Now, the impact analysis, of course, bearing the brunt would be the brokers, especially on the discount side. And in the listed space, if you look at it, Angel One is having a big exposure in that. The discount brokers, if you look at it, Zerodha, Grow Up stock also come to the list as well. And Investec has come out with its report. Now, they've maintained a buy with a target price of 3,850 rupees per share, and they've stated that the uniform charges by the MIs will impact Angel One's earnings by almost 25 to 30%. Now, the brokerage charges transactions and depository charges to the customers, so which are at the higher end of the slab, and they pay lower charges to the MIs depending on the volume-based discounts. So this differential actually expected to come down, and it's estimated as per the broking house that Angel One earned 400 to 450 crore rupees from these charges in FY24. Now Angel will try to mitigate this response, and they're offering one of the lowest broking rates in the industry also. So in case in a base case scenario they might increase it to almost 20 rupees per order as a brokerage, then it should be able to reduce the impact of the circular. Now the broking house believes that the impact of the order will be more for other discount brokers whose profitability is low. So of course there is a word of caution in the street when it comes to the discount brokers.
Right, so there was a caution on the street, what we saw for the entire pack. Thanks very much, Shara, for getting us all the details. But then let's go across and gather a reaction from an industry expert on this. In fact, we spoke to Deven Choksi, Managing Director, Dr. Choksi Finserve, on the new SEBI directive that mandates a uniform fee structure across all members of MMIs. What does he has to say on this? Let's listen in.
I believe that I think it's very natural for them to announce this particular move, because otherwise what you are probably encouraging is significantly large amount of volume, and that is what I think one can call it as a speculative activity into the marketplace. One of the reasons for which I think the activities have on rampant rise, I think from the derivative point of view, is also because of the fact that I think you are incentivizing the players to bring in more customers for trading. Now, should you stop this particular incentivization process, then in such situation, definitely, I think the brokers will be forced to charge the customers, which up till now, I think some of the discount brokers haven't been charging. To my mind, I think it's fundamental. When you provide any service, if you give it free of cost for longer period of time, that means that I think you are encouraging the wrong practices. You definitely need to charge one and everybody, because every service does cost money. So from that perspective, I think if the move is going to aim at increasing the charges or broker charging to the customer, that will probably keep in check some part of the speculative activity.
All right, that's the view coming in from Deven Choksi on this entire blow that SEBI has dealt to the broking pack. But on that note, we'll slip into a very short break on this edition of Your Trades. More on the day that was when we return.
Welcome back. On the derivative side, we saw a flat trend for coming week expiry. Nifty has got a flat trend, whereas Bank Nifty also seems to be unwinding. VIX was at the stable levels 13.6, but then there was a call writing action which we saw on the weekly options for the 4th July week, and 24,200, 24,300 both seem to be the resistance. Immediate resistance, of course, 24,200, because a maximum of the call writing happened on these strikes only. Support in terms of 24,000 looks like a crucial support at this strike, because the maximum of the put writing is happening at 24,000 as well as 24,100. So looks like maybe some kind of consolidation or sideways move is anticipated on the indices.
Absolutely. So those are the key levels to watch out for when it comes to Nifty on the support and the resistance. But let's talk about one of the sectors that was buzzing today. In fact, the top buzzing sectors today happen to be paper stocks. And take a look at these moves, because JK Paper ended the day with an 18.5% uptick. Sesha Sai up 7.6%. You have West Coast Paper up 7%. Big moves coming in, and paper scripts have logged resilient gains on the back of price hikes in the pulp and paper segments. Now, channel checks suggesting a demand-supply mismatch in the industry. Sharad, is that the scene? Is that the case? Tell us what has led to this this spike that we've seen in paper stocks today.
Well, yes, paper stocks are in focus, and they have been buzzing in trades such as JK Paper, Andhra Paper, West Coast Paper, SHI Paper, all moving up in the trade, as the channel checks are suggesting that the paper board prices have increased for the month of July, and they have been hiked to almost 2,500 to 5,000 rupees per metric ton. Even duplex board prices, they have risen between 1,000 rupees to 2,000 rupees per metric ton. And interestingly, the companies have stated, and the channel checks also state, that higher raw material costs are persisting, and importantly, there is an unavailability of critical ingredients which are being used in the paper industry. Now, this is the third straight month of overall price hikes happening because of rising paper and pulp prices, and overall the industry itself in the paper segment is still suffering from a demand and supply mismatch. Now, if we just look at the certain larger players, in the paper industry. JK Paper giving 82% return in a year, and over the last month itself 50% return coming just from JK Paper. Andhra Paper, West Coast Paper also giving almost 50% returns to investors over the last 1 year. Valuations front, they have turned expensive, and if you look at the FY24 12-month forward P numbers, JK Paper and West Coast Paper, both of the stocks are trading at 8 times.
All right. Thanks very much, Sharan, for all those details. We did caught up with the management of a paper company, why paper stocks were on tier. We caught up with the management of Quantum Papers to understand what lies ahead when it comes to pricing action. Let's listen into what VC and MD Mr. Pawan Khetan had to say on it.
Certainly have been price hikes in the last 2-3 months. I allude to the fact that we have increased 3,000 to 5,000 rupees per ton on our paper prices in these 2-3 months. I think going forward, this is a trend which is going to continue. There is clearly a positive and uptick in the demand and pricing situation. So the industry is going to take advantage of that and see price hikes coming in future.
All right, let's move on and talk about the real estate space. Nifty Realty has seen some bit of a buzz coming in after being a consistent drag over the past couple of sessions, and that is being led by the move in Godrej properties today, up 4.5% in today's trading session as where the stock is closed. Let's understand what has led to this uptick coming in the stock on an intraday basis. And it's not just today, it's also yesterday that we did see a couple of announcements coming in. So let me break that down for you. Today they've announced that they've sold over 2,000 homes worth 3,150 crore rupees at the launch of Godrej Woodscapes in Whitefield. Now, why is this such a big deal is because this is the company's most successful launch ever in terms of value and also in terms of the volumes of sales they've achieved. Remember, this is the company's 6th project in the last 4 quarters to have an inventory of 2,000 crores on the of sale on the day where a project has been launched. And also what's very interesting to note is that the company has surpassed its full FY24, the full year FY24 sales in the south of India. All of that has been passed in the first quarter of FY25 itself. So very, very big run-up coming in for Godrej Properties over here. Now, yesterday also a couple of announcements came in where they've acquired 7-acre land parcel in Bengaluru with an estimated revenue potential of 1,200 crores, and also they've announced plans to develop that 11-acre land parcel that they already had in Pune, and estimated revenue potential from this piece also seen to be at 1,800 crore rupees. So couple of back-to-back announcements in the stock is what has led to this rally. Very smart moves coming in. 4.5% higher is where the stock closed.
That was a stock-specific move, but then entire space, real estate also, what we saw for the Mumbai registration property, because Godrej happens to be a year player only. June sales figures, property registration figure also were quite a high figure.
Exactly.
Anyhow, the space is buzzing, but then there is one more space which is catching up the attention of the traders and investors, a new entrant in the Indian Alcor beverage space, Allied Blenders that listed on the bourses with a 14% of premium to the issue price. Let's hear out word from the management on the FY25 targets that the company has set for themselves.
The growth expectation of the industry is around 9%, and we would be in line with that, especially on the mass premium and the other segment. So we would be mid-teens on the premium segment and low teens on the mass premium segment. The EBITDA margins have been historically around 9%. It came down consequent to COVID to around 7%, and after that the increase in the material cost, especially glass bottles and the ENA. Post that there has been a recovery in the prices of the COGS, and consequent to that the EBITDA margins would be in line with peers over the medium term, and immediately we should be around early teens.
Alright, so that was the word coming in from the management of Allied Blenders. That stock made its D-Street debut today with a 14% premium. But let's move on and keep it going with a list of all the stocks that were buzzing in today's trading session on the back of individual news flows. And my colleague Gaurav is joining us with a quick roundup of just that. Gaurav.
Well, yes, let's begin with Gandhar Oil Refineries, because company recently won an order from Abu Dhabi National Oil Company, and this order going to be in the form of annual contract, and the value of this annual contract is going to be around 375 crore rupees for 2024, 25 and 26 each. And on back of this news, we saw some kind of bullishness coming up in this stock. Next, let's talk about Penner Industries, because company is going to expand its manufacturing capacity in northern India in the tune of 36,000 metric ton, and this is going to commence in 2Q 2024 itself. And on back of this news, we saw this stock also turn into green today. Next, let's talk about L&T, because recently ET now spoke with the management of L&T, and they stated that the 35,000 crore order which has been there in the media reports was received by the company in November itself. And again, from here on, company is going to participate very actively in most of the green hydrogen and blue ammonia projects. And on back of this news, we saw the stock traded in green today. And lastly, let's also look at Bharti Airtel, because one of the key shareholders, Singtel, is likely to sell shares worth 20,000 crore rupees in multiple block deals as per media reports, and we saw stock also reacted negatively on this news. So definitely watching out on all these counters in coming days as well.
Thanks very much for listing down all the crucial stocks and the news on which they were buzzing. Moving on, speaking on the sidelines of CII event, Power Secretary Pankaj Agrawal has assured that the government is working out a new strategy to meet the sudden spike in power demand in the country. Let's listen into what exactly he had to say.
We had projected our 2031-32 peak demand as 384 gigawatt, and in the last 2 years we have witnessed a very sharp increase. This year, in terms of megawatt, it is already up by more than 9%, and in terms of million units, it is already up by about 11%. If we compare the Q1 of the current financial year with the Q1 of the previous financial year. So these recent trends we have fed in the model, and we are now working on for the projections. We are updating our projections. We have been working with the states. Some of the states have already updated the demands. Challenges are basically mostly related to the the preparation of the grid. What they do is they normally work on the RF mesh, and till the mesh is there, probably the meter doesn't get activated in the smart mode. It remains basically a normal electronic meter. And once there is a communication mesh, then it starts functioning like a smart meter. Then there are contractual issues, like somewhere AMISP has come, but the single-phase meters are there and they need the three-phase meters. There are an empty number of challenges at the ground level. There's no policy restriction. The policy actually means that the two should actually work together so that the consumer at large need not to spend money. There's duplication of investment.
All right, that's the word coming in from the Power Secretary on how they plan to meet this sudden spike in power demand in the country. But on that note, we're completely timed out on this edition of Your Trades. From Priyanka, me and the entire team that put this show together, thanks so much for watching.
If you like this video, then like, share and subscribe to ET Now.